The broadcast is now starting. All attendees are in listen-only mode.
Well, good evening, ladies and gentlemen, and thank you for being with us for this Danielcode tutorial. I'm glad that you can all hear me. Terry's with us today, which is a great honor. We don't often have Terry with us, but he's here and alive after all of his journeys around the States. Norbert, hello, and thank you, my friend. Good to see you. Guy, Sim and PECSIM tutorial clients. Wonderful to have you with us. Fly me to the moon, he says. Great. And audio's good in KL, so it's good everywhere. Hank down in the Hunter Valley. Lovely to have you with us. And Dean, of course, a bit of a star. He doubled his account. He's a tutorial guy. He doubled his account in 1 month in August. Pretty good at sized accounts. Even better now. Well done, Dean. Fantastic stuff. Peter King's with us, the short-term trading guru. Good to have you with us. All right, folks. Well, today, oh my goodness, look at all the people here today. Do excuse me. Albert's with us. He's a tutorial bloke. Anthony, he lived down in New South Wales. Cameron, he's a tutorial guy. Carol, always special to have ladies with us. We don't have many lady members, and it's great to have them. Chase, who was responsible, together with Mick Dougal, for bringing you the smoke-free tutorial. Sim and PECSIM, Colin, plenty of others are here, and Norbert, of course, up in Canada. Great to have you all with us, folks, and glad that I'm glad that Tom up in Vale, Eagle Junction, I think, or Vale, one of the two, Tom. Good to have you with us, mate, and I'm so glad it's created so much interest today. All right, well, we've got a particularly big webinar today because this is, Sue's just joined us. Sue up in Cairns. Lovely to have you with us. I hope your trading is going just as well as it was. Okay, so let's get started, folks. Here we are. And Tom's just joined us from Florida. He's a wealth manager. Good to have you with us, mate. Terrific. Sean also. Okay, so as you know, you see this slide every time. Markets are rational, orderly, and sometimes predictable. No one's ever really asked me what that statement means, but today you're going to find out, and it's purely a function of how the Danielcode works, that it's endless habit of tracking at market prices that are on your members' charts is so strong that gives us really high probabilities of sometimes being able to predict what's likely to happen. So today we're going to talk about moon cycles and also the sun cycles as well. But I mean, they're a subject of enormous interest to many folk, not May folk, many folks. Spell check didn't pick that up. It's a typo, excuse me. But a search of Google returns over 63 million individual items for the phrase moon cycle. So it's a big deal. And there are 3 million items on a search of moon cycles of financial markets. Here we are. This is the leading statement. The returns of stock exchanges around the world are strongly affected by the phase of the moon. In a nutshell, markets rise several annualized percentage points faster during the 4 or 15 calendar days around a new moon than they do in a similar period around the full moon. That's not my research, that's just a comment I picked up. So plenty of people think that markets are affected by the moon. But if that's true, it must also apply to futures contracts, which I guess it does. Okay, let's have a look at this one. This is many moon cycles. There are literally hundreds and hundreds of moon cycles. They're just endless. The most common that everyone tends to focus on because it's so easily observable are the full moon and the new moon cycles. And there is some evidence that markets, particularly silver and the S&P, do respond to new moons and full moons. There's even a Gann moon cycle, and I'm not going to say anything derogatory about Mr. Gann. The last time I did, Jim C over there in the States chastised me. He's a great Gann believer, and of course I was a Gann man for 12 years, and He had his own moon cycle, and it really came through his mentor, who was a gentleman called Walter Gorn Old. He used the non-deplume Cepharial. And he's actually a very famous astrologer, not an astronomer, an astrologer. And he was interested in Apogees and Perigees, but very interesting guy. At some stage, he became the turf editor for the Times newspaper in England, and he used to forecast horse racing results using the time of the day and their birth numbers and all that stuff, which I don't understand, but he was a pretty interesting guy. So this is the S&P, and you can see this last high we had came right on a full moon, and the previous one in end of June this year also came 1 bar past a full moon. You can see the big sell-off back in February came 1 day before a new moon, and that's pretty interesting. And that low, the big miracle snapback low that started this whole current rally, came 1 bar past a new moon. Now, there is reason. Well, let's have a look. This is silver, incidentally. These are the new moon, the full moon, and the quarter moons working on silver. Have a look. It made its high in very late August on one of the quarter moons, third quarter moon. And then the whole move up started with a new moon 1 day before it. The next high came at a new moon. It went down into the first quarter, number 1. That's the first quarter of the moon cycles, and then it rallied again, made a marginal new high, and sold off on the full moon. So there's no doubt markets are affected by the moon. And like all cycles that we use in financial markets, remember that they're always plus or minus 1 period. Here we are, Janet. Here we are, driving home. Had to avoid hitting something or other. You take care, sweetheart. We don't want anything to happen to you. Janet's a very, very good Danielcode member. She's been to many tutorials. Wonderful lady. Moon cycles are like all cycles. They're average. They're accurate to plus or minus 1 period. Well, why is that? There's quite a number of reasons, but the most obvious ones, events that occur near midnight can be allocated to either day, new moons, full moons, the other more important cycles. Weekends and holidays force allocation to the nearest day. So, if you've got a cycle rolling over or maturing on a Saturday, it will appear as a Friday. Sunday will appear as a Monday. The cycle that's pretty much in the middle of those can be 2 days out. There's some small evidence, and plenty of people want to argue that moon cycles have known effects on market behavior. I've talked about this before, but not for a very, very long time, but it's interesting. There is some evidence to support that proposition. But more importantly, we at the Danielcode, we're very interested in turns. Our life is all about turns, because all new trends start with a turn. So that's a major focus for us. So these are your basic observable moon cycles. It's a little bit blurred, the blow up of this. It's not obviously it wasn't designed to go this size, but you can make it out. You can see how the moon moves from the full moon through the first quarter into the new moon, into the last quarter, and then the cycle begins again. So you can see how those cycles begin, and they're caused by the relative position of the moon and the sun in relation to the moon and Earth, I should say, in relation to the sun, which creates the light and the shadows that you see. So they're your basic moon cycles, and full moons, new moons, etc. They're just caused by that sun, moon, Earth positioning. But Apogees and Perigees are very interesting. They mark the extremes of the moon's orbit around the Earth as the moon's gravitational forces change. This is very important. So the movement around the Earth affects, and in fact it creates, the ocean's tides. Now, think about this. A gallon of seawater weighs a bit over 8.5 pounds, and that's a pound more than a gallon of fresh water. But try my bucket test. Put a couple of gallons of water in a bucket, put another couple of gallons in another bucket. Now pick them both up, one in each hand, and extend your arms out sideways so that they're parallel to the ground. You won't be able to hold it for very long, I promise you. And think about the weight and the gravitational, when you're just holding them out. It's the Earth's gravitational pull that's pulling this stuff down. But that gravitational pull is there all the time. And what the moon is doing is its gravitational pull, sometimes together with the sun's gravitational pull, is pulling the water up. It's creating a huge bulge in the water. And that involves many millions, not pounds or even gallons. It's literally tons and tons of water. You think of some of these big tides you may have seen if you're lucky enough to live in one of the coastal areas. And if you have a look at the tides and how dramatic they are, in some places they're more dramatic than others. Up on the north coast of Queensland, for example, they move 25 to 30 feet between the highs and the lows. Other places in the world you're going to see that even more. But the tidal force required to lift that water up, to make the bulge out on the side closest to the moon, and the side furthest from the moon, just that huge bulge out, those bulges of water, they're high tides, and that high tide, the movement of the tide, is largely created by the moon. So, very important that you have a look at this chart. We're talking now about apogees and perigees, and the moon has an elliptical orbit around the Earth. It's not a circular orbit, it's an elliptical. So it's longer at one side than the other. And when the moon is at the end of its rotation, at the furthermost point away from the Earth, that's called the apogee. At the other end of that lunar cycle, it comes to a position where it's as close as it's ever going to get to the Earth, and that's called a perigee. And what's actually happening, if you look at the apogee, for example, on the lower line, you can see it's going out, going out, going out, so its gravitational pull is reducing. It's further away. Newton's proved that the tidal forces are a function of the gravitational pull of the moon and the sun. Whether they're in conjunction or in opposite gives you different tides and give you really big highs and really low tides. They're called spring tides. The opposite of that is neap tides, N-E-A-P. But you can see, following that bottom line, how it's dotted. It's moving out, it's moving out, it's moving out. So the gravitational pull of the moon is getting less and less and less. Then it reaches that critical point where it's at its maximum distance away from the Earth, and it switches, it starts to come back, and that gravitational pull has switched. It's going from negative. At apogee, it's now starting to become positive. Same at perigee. Moon's been tracking along that upper dotted line. It reaches the point of perigee. That's the closest it's ever going to get to the Earth in its orbits. Now it turns, and gravitational pull has been decreasing. At perigee, it reverses. It starts to increase, and that's vital stuff. So apogees and perigees, something you need to know about. So in 1687, Sir Isaac Newton, who I talk to you about often because he's a guy who follows a lot of the Danielcode rules, explained that ocean tides result from the gravitational attraction of the sun and moon on the oceans. Now, the sun is many times, in fact, 27 million times larger than our moon. And based on its mass, the sun's gravitational attraction is 177 times greater than that of the moon. But if tidal forces were based solely on comparative mass, the sun would have a tide generating effect 27 million times greater than that of the moon. However, the other part of Newton's law explains that distance of the bodies, in other words, the sun is 390 times further from the Earth than is the moon. Thus, its tide generating force is reduced by 3,900, or about 59 million times less than the moon. So the sun's tide generating force on balance is about half that of the moon. And there's a lot of scholarly articles on that if you're interested. So this next slide, these particular two aspects show you how the gravitational pull of the moon is changing, and it's showing you the Earth, the little blue dot, is at apogee, and on the bottom oval, and at perigee on the top. That is, that's as close as the Earth ever gets to the moon, and its gravitational pull is at its maximum strength. So we've got the sun and moon, we just have, a light show, basically. That's not quite that simple, but apogees and perigees give you a known change of gravitational pull, which is extremely important. We then have a new word for your Syzygy, at the new and full moon, the sun and moon are in Syzygy. That means 3 celestial bodies in a straight line, and their tidal force then acts to reinforce each other. And the ocean both rises higher and falls lower than the average. Conversely, on the first and third quarters, the sun and moon are at right angles. Their gravitational force is counteracting each other, and that makes the tidal ranges smaller. So as I've told you, spring tides have higher highs and lower lows, whereas neap tides have lower highs and higher lows. Hence this range much larger in a spring tide than in a low tide. So think about that. Think about what's happening at a Syzygy when the sun and the moon are in the combined orbit. They're both on the same times of the Earth. They're both on the same side of the Earth, I should say. That's when their combined gravitational pull, that's it at the maximum. And when the Earth is on the other side, the sun is on the other side of the Earth to the moon, which is what's happening in these orbits, that it's giving you considerably reduced gravitational pull. So I hope you're enjoying this stuff, most of which is out of Wiki so far. The world's largest tidal range is 53 feet. Occurs in Canada, and the United Kingdom sees ranges of 49 feet. Extraordinary, isn't it? I've seen ranges of 28, maybe 30 feet in North Queensland. It's staggering stuff, particularly when you come back from going to do a bit of shopping and find your boat is out of the water. It's sitting there high and dry on its keel, looking stupid. In fact, the owner, that's me, was looking even more stupid. That's what big tides can do. So 7 days after spring tides, the sun and moon, then they're at right angles, and that's the quarter tides. And the bulge of the ocean caused by the sun's partially cancels out the bulge of the ocean caused by the moon. So they're neap tides when the moon appears half full to you. And we have, folks, something you may not have thought about. We have air tides. When the ocean meets the shore, its tides are not observable, but that gravitational pull is still working. And it works as the gravitational force moves across the Earth in exactly the same way it works when it's moving across water. For day traders, and I know we've got a few with us here. Here we are. Hello, Rob. Moon is extending its distance from the Earth each year. Yeah, of course, yeah. Gravitational decaying rate of gravitational pull of the Earth. Day traders, we've got plenty here. If you're interested in this stuff, I used to do this years ago. Get the exact coordinates of the New York Stock Exchange. I actually paid some surveyors in New York and asked them to go and get me the exact position at the center of the New York Stock Exchange, because with our equities futures, that's what we're trading. S&P's running off the results of the New York Stock Exchange. NASDAQ runs off its NASDAQ results, a different platform. But I was primarily interested in the New York Stock Exchange and the S&P futures contracts, the differences between where those platforms are based is marginal. But then once you've worked that out, work out what those exact coordinates, and see how far it is from the New York Battery. New York Battery is the nearest tidal. It's the nearest tidal measuring station, closest to the stock exchange in New York. Then get some really accurate tidal charts. You watch how markets turn at quarters of the tidal range and other important points. You can see that on the tidal charts when you've worked out the actual time differential from wherever the tidal chart is quoted. You have to adjust. It's minuscule, but you have to adjust that to time at New York Stock Exchange, which is closest to the New York Battery tide measuring statement. And better still, if you apply the Danielcode ratios to tide charts, you will see the air tides. You will actually see on a very short-term chart, you'll actually see the turns coming through as the air tides move across New York. So Daniel, of course, our mentor in all of this, he used a lunar calendar. So the moon historically has been enormously important to civilization. All civilization used a lunar calendar before we got the current modern Gregorian calendar which we use. So a lunar calendar is based, as you would say, on monthly cycles of the moon's phase, and they're called synodic months, in contrast to solar calendars whose annual cycles are based only on the solar year. We now use what's called the Gregorian calendar, but there's still a whole lot of use of lunar calendars, as you'll see. And the details of when months begin varies from calendar to calendar, some using new, full, or crescent moons, and other employing detailed calculations. And a lot of religious holidays and cultural holidays are still calculated from the lunar calendar. The most important one, or the most known one that I know about anyway, is Ramadan, which is the Islamic calendar. And if you read up on that, you'll find that the days of all these Islamic holidays are calculated from the first sight of the crescent moon. Now, don't jump down my throat if that's wrong. I'm not a Muslim, but I believe that's how it's calculated. Back in the day, I was very, very interested in a software program that you could just tap it one day at a time and see it cycling through, or even 1 minute at a time if you want to get really obsessive, as I was. And you can actually see on that program, and there are others available, you can actually see the moon moving into its perigee, then reversing and starting to return closer to the Earth in its next leg of the orbit. Very, very interesting and very, very powerful. So think about that power of the tide that's lifting these massive, massive parts of the ocean, incredible weight, just to show you how strong that gravitational pull is. And you can see that there's lots of other cultures and countries that use the lunar calendar to measure their traditional holidays. So the lunar calendar has been a very, very important thing. And in the same way that the market has memory of that, it has memory of the exactitude in time cycles. So don't forget, if you have a look through this particular slide, markets used to trade on Saturday. In fact, they traded on Saturday until 1952. And it was only September 1952, which probably seems a long time ago to you, but not that long ago to me, that the markets went to trading on Saturday. So that's one of the reasons that we have this error of plus or minus 1 day when we're calculating time cycles, because we're never quite sure if the market's tracking its 6-day cycle or its 5-day cycle. Although we always do our calculations on the 6-day cycle. W.D. Gann used to say, if you are worthy, I will tell you the number. And worthy in those days involved probably the price of 2 Buicks. Buicks were his favorite car for all sorts of reasons. And this is back some considerable time ago. What we so that's one of the reasons that there's that plus or minus 1 day error in all timing cycles, because apart from the fact your chart's not showing you exactly when they fell, I guess you could go to a chart, a lunar chart, and you could find out exactly when they fall. But this issue is that the market has a memory that it used to trade 5.5 days, or 6 days it used to trade, half day on Saturday. It still has that memory. Extraordinary. That's why, and Gann would say, if you are worthy, that's, buy about 2 Buicks worth of my courses, I will tell you the number. And the number he would tell you is 7, which is not right. It's not. The vibration of all markets is 6. And we get that from everywhere else. We get every bit of knowledge we have, essentially, from the Danielcode. So start thinking now about the Synodic month. The Synodic month is the most important cycle in the moon. And the Synodic month is a complete cycle of phases of the moon as seen from the Earth. And it averages 29.53 mean solar days in length. Gives you exactly the minutes, hours, and seconds there. And that will vary. That means the length of all astronomical months varies slightly according to Wiki, but the the Synodic month, it's a complete cycle of phases, and it's the mean length of that Synodic month is 29.530, etc. days. Well, have a look at the Danielcode. A Danielcode month is 29.666 mean solar days. The difference between the Danielcode month and the Synodic month is 0.13 days a month. If you remember that all time cycles start from the next perigee, it never gets further out than that. So think exactitude. Think that's a noun. Think the quality of being exactness, preciseness, accuracy. You're going to see, those of you who haven't been with us long, just how incredibly accurate the Danielcode is. So all of these things give rise to Needham's law, which is pretty simple. All markets turn at and only at the Danielcode time and price ratios. There are over 30,000 of my charts in our chart archive at the Danielcode website to prove it. And you can go to the chart archive, have a look through it. You'll be flat out finding a market that's ever turned anywhere except at one of the Danielcode numbers. And finally, this statement that I make to you often, which is a bit hard to accept for most people: time and price are the same thing on different axes. Now, I sometimes talk about time and price being squared. That's actually a Gann expression, but for us, it doesn't mean what Gann meant. I borrowed that from Mr. Gann, and I hope he's not offended. But in the Gann lexicon, time and price being squared means that price is at one of his diagonal lines, 1x3s, 1x8s, 1x1s. He had all these very particular, precise lines that he drew on a chart. And when price was at that one of those lines, and time was also at one of those lines, he would say time and price is squared. Well, it doesn't actually work like that. How it really works, and how the Danielcode uses it, is that if time is at one of our known Danielcode ratios, and price is also at one of our known Danielcode ratios, it doesn't have to be the same ratio, then we say, we say time and price is squared. And when time and price are squared, a turn is almost inevitable. Very important stuff. So let's have a look at Perigees. This is the S&P, and we're concentrating mainly on the S&P when we're talking about time. All markets work exactly the same way, folks. So don't, if you're interested in futures, if you're interested in Forex, if you're interested in commodities or metals, don't throw it out in the bin. All markets work exactly the same way. I've just chosen to show you the S&P data because that's the one that is currently causing excitement. So you can see in this period here, which is January the 18th, basically to January the 19th, almost every significant market turn came at or very near to a perigee. Quite extraordinary, isn't it? But the big thing about these patterns that fools most people is they don't last forever. Now there's a long period of markets turning at perigees. Look what happens here at the low, at the early April mini crash low. The low came one day before an apogee. So there's our plus or minus 1 day variance that we allow. Right on that low, in fact, the next day came the apogee, which stopped this market like it was shot, and boy, it was falling like a rocket. You'll remember that. And if you keep looking along that chart, you'll see that 1, 2, 3, 4 of these turns, some major, some minor, came at either an apogee or a perigee. But both the most recent turns in late June and, of course, the recent turn that we're sort of in now, they came on full moons. And the last turn we had, this is the September turn, 2nd of September with that high, that's a full moon, but that's also 2 periods past an apogee. Is that within our allowable limit? Well, not really. So what is it that made that market turn this time? Have a look. Here's how we would find the February high. In fact, this is how we did find the February high. I have to say that I don't believe that we have ever missed a significant turn in the equity markets. And this is a very, very great example to show you how I do that. So remember what I said, all markets turn at and only at the Danielcode ratios. So right here, this is a big earlier high. This is the March high, which was very dramatic. That came not on a perigee, but a Danielcode number from a perigee. 44 days from a perigee. What is that number? It's 1.5 times the base Danielcode number, which is 29.6. In other words, it's time and then half. Very important. That's one of our instructions on how to use time cycles. It shall be for time times plural and then half. And times plural can mean 2, 3, 4, 5, 6, as many times as you like. But here is a simple first cycle, 44 days from a perigee. 44 days is time and then half, absolutely in accordance with our instruction. Have a look at the next chart. Now we've added another time cycle from an earlier perigee. Now we've got 62 days, which is another one of the Danielcode numbers. It comes from the rule of eighths, and there it is. 62 days from the earlier perigee gave you the high and the turn. Keep going with that. Have a look then what happens. There's the basic Danielcode 29 cycle running from the same perigee that gave us the 44 cycle. It's now giving us a 29 cycle to that little minor top near the apogee, up into, of course, the 44 cycle as well, time and then half. So you can see that all these things come together. This, of course, excuse me, is multiples of the Danielcode time cycle, which you could substitute because they're within 0.1% of a synodic month. So this moon cycle, if you like, and it came at 3.5 times the Danielcode number, 29.6. But if you put in the synodic month number, 29.7 to 0.5 rather, it would still form on the same point. And what is that? That's 3.5 times the Danielcode number. And these sequences go on and on and on and on. And if you look through this sequence earlier on, you can see the 29 came 1 day after an apogee. The and half came right at a little top that gave you a 2-bar counter trend. The 74 cycle came at the low. The 89 cycle came at the counter trend high after we got the start of the rapid crash down. And the 104 cycle, which, as I say, is 3.5 times the Danielcode number, or if you like, 3.5 times a length of a synodic month, if you believe in science and want to verify everything, which you should. You can use that as a multiplier to find time turns, and that was a time turn at the low, which was in its way just as, if not more dramatic than the turn from the high. Okay, now we move on and we start looking at the September 2020 high. It comes exactly at 29 days from the Perigee. There you are. That was sitting there smiling as the market moved up and up and up and up. That's one cycle. That's one period of Danielcode time. Danielcode says that time is 29.6 days. That's a measure of time. It's an important measure of time. There are many measures of time, but that is a very, very important one, particularly for us. We make our living off using these numbers. One cycle from the Perigee straight up gave you the high bar of the September the 2nd high. Extraordinary, isn't it? Let's move on. This is the same chart. And what I've done is I've put on it the standard indicators that we use, and two of them are stochastics. There's a short-term 533 stochastic and a longer-term 1433 stochastic. And to get a blue line, which are our strongest trades, the blue line trades, we need to have three conditions met. First of all, as you'll see as we go forward, we must have target recognition. We must have price recognition, or recognition of a target price. Then we need to have an overbought stochastic on the short-term stochastic, which it was, an overbought stochastic on the long-term stochastic, which it was, and we need divergence on our proprietary momentum indicator. So all of those conditions are in effect. But as you can see, you can stay overbought much longer than you can stay financial. So there's no trigger unless you're using Danielcode. If you're trading any other system, there is not a trigger that says this is a very high probability reversal coming up, because this market has met those three conditions. The first and most vital one of which is it must have target recognition. So this is the members chart for September the 2nd. It was posted on the evening of September the 2nd. Includes the up bar for September the 2nd. And there you can see that this bar went right into that the blue line at 3583.75. You can then see the next members chart that came out, and the market sold off nicely, very nicely. It was the blue line target recognition that is the trigger. There's no method of calling turns to the accuracy we expect, which is plus or minus 1 day, although I must say blue lines sometimes they're valid for the day of posting and the next 2 days. But there's no way of having that degree of accuracy if you're not using the Danielcode. So it's always occurred to me that having access to these Danielcode numbers is the greatest gift any trader can have. But it's amazing that we're still such a small business and nobody uses this stuff. And it's dynamite, as you know. We have plenty of people here who've been with us a long time. They see this all the time. Have a look. Where did that market go to? That was a hugely volatile move straight down. You had a black line at 33.49. That stopped that move, but it can go on from there. Look at the second blue line at 32.96 on this chart. And there we are. Where will it go? See the second blue line. I cheated myself by telling you. 32.96. Have a look at the next chart. That's where you got this turn. Blue line trades are our strongest signal. And both election and failure mean a likely trend. Have a look what's happened at this low. It's pretty dramatic. It was charging down. If you weren't short, it was very, very dramatic. And look what it did. It hit the blue line and stopped like it was shot. And I'll tell you how good that is. The blue line, as you can see at 32.96, has been on members' charts since the high. And what was the actual low? 32.95.5. 1/2 of a tick. Sorry, 1/2 of a point. Just 2 ticks. Incredible. 33.95.25. Wow, that's how accurate this stuff is. So bear in mind, these are our strongest signals, the blue line trades. Both the election of a blue line trade and the failure of it means a likely trend. Sometimes you will see markets acknowledging a blue line and then roaring past it. And if you were to get a close on the daily chart below 32.96, it's very strong information that you're involved in a major downward trend. Okay, so hang on to that now. The detail of how this works. We allow just 0.1% variation for target recognition. When that happens on a bar high or a bar low or the close. If the market's going up, it's going to be at the bar high or the close. If the market's going down, it's likely to be at the bar low or the close. In fact, on this particular chart, the day before this low, the low here came yesterday, Wednesday, the low before that, the low of Tuesday, actually hit a blue line perfectly. The next blue line was sitting there, and that's what the Wednesday's trade bounced off. As I said, that low was 39.25.5 against 32.96. So let's have a look. So we expect target recognition within 0.1% at a high or a close, or if the market's going down at a low or the close, and occasionally it's the average of the high and the close, or if the market is going down, the average of the low and the close. You can see here in a number like this, 35.83, 0.1% is 3.5 points. And the variance at the high, 3.25, was within that allowable variance, and the variance at the close was nowhere near that variance. But look what happened if you take the average of the high close, 35.82.125. In other words, it's pretty well smack on the number 82 and a bit against the number at 83 and 3/4. Back in 2014-15, for example, when gold was trading at 1,000 plus, 1,000 up, we had to actually go down to tick values to work out what 0.1% meant. But these are big numbers now, so it's got up to 3% plus. But when you look at the Danielcode chart, the first thing people say, the ignorant bunch says, God, there are a lot of numbers. How do you know which one it's going to hit? And the answer is we don't know which one it's going to hit. We never know which one it's going to hit. But what we do know is that it will turn at and only at one of our Danielcode numbers. They may be the red and black numbers, which are retracements of an operating range, or the blue numbers, which are extensions of an operating range. And the way they do that, you'll get to the stage, if you do this for a while, you won't even have to do the math to work it out. You can tell just by eyeballing it how the market's done that. You can see here this market went through the first number, 35.83, then it scurried back to sort of say, I'm sorry. Now, have a look at the average. There it is. And this degree of accuracy is absolutely extraordinary. So, for all of you members, I have not been talking enough about Forex lately. I had one of my clients say to me, Graham, over across the sea there, actually he's with us today, saying, you don't talk much about Forex. You still cover Forex? And the answer, of course, is yes, I do. We have a lot of members who trade Forex. And Forex works exactly the same as futures. The only difference for futures is it uses a 5-tick buffer, whereas on futures markets we use a 2-tick buffer. And if you want to know why we use a 2-tick buffer, you can have a look what the S&P did today. The high yesterday was 34.24. The high today was 34.24 and a quarter, so it was 1 tick above the Wednesday's true high. That's why we use a 2-tick buffer. I got no real scientific reason, just I got very annoyed about being filled by 1 tick, as you would be if you were long on this bar today. And I said I'm going to use a 2-tick buffer from then on. But in Forex, because Forex doesn't have a central exchange, the Forex prices are created by the different platforms, and it comes from the prices they're being fed by their so-called liquidity providing banks. As we know from the spectacular collapse of Alpari, those numbers are lots of fun, but the banks are not providing liquidity and they're not taking any risk on the trades. But the numbers, because you'll have, if it's an American platform, you'll have 5 or 6 major US banks providing that data. If it's in Europe, you'll have 5 or 6 major European banks providing that data. And that gives that slight difference between true highs and true lows. And the only real points of resistance you'll ever find in trading are daily true highs and true lows, and the Danielcode ratios. So that's that. So I want to move on. Some time ago I told you that our website Pro subscribers, they're those lovely folks who pay $249 a month, are the actual backbone of the Danielcode business, and I wanted to reward them even more than they're rewarded by seeing all the blue line trades and the other trades. So we said maybe a couple of months ago, you're most welcome. There's so much interest in success, which is truly sensational. You're most welcome to pick any 2 success markets you're interested in. If you're a website Pro subscriber, let Terry know, support@thedanielcode.com, and he will get you switched on for those 2 success signals so you have access to them. Once you've got those signals, you can change to different markets once a month, no charge. If you want to change more often than once a month, you're quite free to, and Terry will ask you to pay a $30 fee. Or if you really want the works, don't forget we have a whole new website offer now at $499 a month to see everything. The fourth seal, TO3 signals, TO3 plus signals gets you the continuation signals and the blue line trades, and the long-term success analysis on gold, crude, and the S&P, which is, as you know, I've been showing you a bit of it lately, absolutely fantastic. Frank does the most marvelous job for us with that. And of course, you get all the success trades as well, which has been roaring. So that's that, folks. So here's the chart of Forex I want to show you. This is the British pound Japanese yen, and we're short on this from a blue line trade, which has now made $4,900 and a bit per one contract. Extraordinary nice business. And that came exactly the same way. You can see, let me bring up the chart so I don't give you the incorrect days. Here it is. This is GBP-JPY. The bar before the actual high bar gave you the blue line signal. So Monday, August the 31st, that high was 142.039 against the blue line 142.009. That was the high of Monday's signal. So once we get a blue line signal, it's valid for the day of posting. It was posted for Tuesday, and 2 other days. So it's valid for the day of posting and the next 2 days. So this bar had 1 bar up. It actually ran slap bang into a black line at 142.663. And the black line is the last level of support or resistance for any market ratio. And it works slightly differently to all of the other lines. To be breached, for the black line to be breached, excuse me, we require a daily close the other side of the black line. And when that happens, it foreshadows with a very high probability of new highs for the move. We told you about this I think it was gold, just before gold exploded and took off. At one of our tutorials, I showed you the Danielcode numbers and said this is approaching a black line. If you get a daily close above that, it's off to the races, which it was exactly. I know some of you did very, very well on that trade, so congratulations. Here we are, this Forex trade. Wanted to let you know that we still cover Forex and trade it, and it's just another market that works exactly the same. All markets turn at the Danielcode numbers and only at the Danielcode numbers. Okay, so I need to get more members, folks. Learning to trade safely and profitably is one of the greatest gifts you can give to anyone. And I will be really happy if you refer me any DC tutorial clients. And if you want to become a introducer as a business, we can talk about a bigger fee than that. But I would like more members. We have great, amazing loyalty actually with our members. Very, very few leavers, but some inevitably do as the affliction of time and other issues moves on. So do think about a friend who would benefit from learning how to trade, and I'll be more than happy to pay you an introductory fee. So if you want to be a super trader, that is, do all the things I've been showing you, and do them yourself in your own privacy of your own home or office every day on any market you like, let me know. I'll be happy to teach you with the Danielcode tutorial. So shoot me an email, please. Let me know where you live and a phone number. I don't want to inadvertently call you in the middle of the night. So if you let me know, I'll call you and we can talk about your trading. We can talk about the Danielcode tutorial, which we're now doing over video, and it's very, very good. We've had marvelous, marvelous results. The business of trading futures and Forex, folks, is not to be right. The business of trading is making money. But I can tell you, if you're right more often than you're wrong, you make an awful lot of money. And with the Danielcode, you have something with the Danielcode numbers that nobody else in the world has. And we are a very, very small business. We've never advertised, and not many people find us. You're part of a very elite, wonderful group. And don't be frightened about other people knowing the Danielcode. That's why I say I don't get many referrals. Most businesses get business from referrals. People say, oh, gee, I got a great leg of ham there, go and buy it. With the Danielcode tutorials in particular, once people understand the Danielcode, they say, crikey, this is too good. Don't tell anyone else. We want to keep this for ourselves, which is why you have that statement. I don't get many referrals, but that's silly. The number of contracts that any individual would be trading through a variety of markets is just not relevant, really. They have no effect. These are massive, massive markets, the ones we trade. So that's that, folks. If you're new to the Danielcode, you haven't had a free trial, you can learn a whole lot of this stuff from the website. But just go to the website www.thedanielcode.com. To start your free trial. Just hit the register button. If you have any troubles registering, some people do because they've already had a previous subscription and their email is in our system. If you have any troubles at all, contact Terry at support@thedanielcode.com. Terry's a young gentleman who lives in Canada most of his life, but he's spending a whole lot of time in Indiana at the moment working on new and exciting projects. But Terry will look after any technical issues you may have. So please feel free to take a free trial if you haven't already. Please, anyone who might be interested in trading, they're welcome to have a free trial as well. This is our disclosure statement. I do ask you to read it. Trading futures, if you don't know what you're doing, you're going to get your head handed to you. I do beg and implore all of you, do not use real money trading until you have learnt about trading and you have satisfied for yourself that you are a safe and competent trader. And if you are interested, you want to do a Danielcode tutorial, I can make you a safe and profitable trader, one of the top 1% of traders in the world. And that's because the Danielcode guys have something that the rest of the world does not have. Okay, so I've got a few messages here I want to deal with while we're here. I always love getting messages from you. So let's have a look. Here we are. That was Rob. He's a mate of mine over in New Zealand. Very, very good trader. A few other gravitational attraction events that I've found affect markets are the lunar nodes. These are the turns that the moon makes from the ecliptic, yes, the phase that made for the Earth, orbiting the sun. The moon doesn't orbit exactly in the elliptic, so ecliptic, I think the word is, isn't it, Mac? So it has high-low and crossing the plane. Doesn't surprise me at all. I think I've actually looked at that before. It's very, very interesting. Everything to do with this subject is interesting because once you balance everything up on the Danielcode, it just keeps repeating and repeating and repeating. Also, during the day, the sun angle and moon angle from a given latitude and longitude, say on the exchange, are influential during the trading day. I suppose charts take all these things somewhat into account because they all contribute. Also, the Earth-Sun relationship has Perigees and Apogees and orbitals. Yes, indeed. Okay, what else have we got also from Mac? There's an orbital nodes. The equinoxes and solstices, I won't mention. Venus, okay, gotcha. Jeff, glad you enjoyed it. Thanks for being with us, my friend. Akshay, glad to have you with it. Any update on T-bonds? Let me have a look. Akshay, QS T-bonds. ZB, here we are. Yeah, here they are. Well, they're range trading at the moment. I can't tell you much more than that. They're range trading and they're just fooling around at the moment. Basically the trend has been down. It's reversed with a very, very strong signal on Friday, August the 28th, where the low of that bar was 173.16. The Danielcode blue line, for those of us that get our charts, and actually you can subscribe and get our charts if you like. You can subscribe again. I know you have been a subscriber. The blue line, 173 carat 15. One tick variance. Very, very nice. Okay, here we are. What do I say about the upcoming election today? Oh, David, good to have you with us. He's alive and well. David's been very, very sick. He's a wealth manager in New York. What we say, David, and you probably missed a lot of this stuff, is that last year, the young gentleman who runs the Fourth Seal for me is a guy called Frank DB. He's a Belgian gentleman, charming young man. He came to one of my Danielcode tutorials in Taupo in 2010 or 2011. Brought his then fiancée Anne with him, lovely lady. And Frank and Anne now have 2 lovely children. But he did an article for us. And you can see it. It's at the Danielcode website, and here we are. You'll see there's 60 or 70 articles in here, almost all of which I've had published, and you can go to this link that says articles. This article near the top, 2021. This was written by Frank. It's our Fourth Seal analysis of the market, written in December 2019, even better than I thought. And what that basically says is new highs into 2021. And during the sort of mini crash when COVID became a major problem, Frank what's the word I'm looking for? He reasserted that. He said, I know it sounds silly, but we're still on track for new highs in 2021. Well, if that's correct, and that's our working assumption at the moment, it means that Trump gets re-elected. and I don't see Biden having anything good to happen to the stock exchange, but that's the hypothesis we're working on at the moment for the fourth seal, and it's been there since December 2019. So far, it's right. Pretty fantastic, isn't it? Okay, so there we are. Adrian's with us. Great, glad. Actually enjoyed that. So that's what we think's coming up. Comment about Trump, yeah. This is from David here. Well said, mate. Yeah, Myrtle Beach is now quite warm, but bars are open. That's right, Gig. Good on you. Go and have a drink, mate. Wish I could go to Myrtle Beach. Be very nice, wouldn't it? Okay, let's keep going. We've got some other comments here. Love to have these comments. They just thank you, Adrian and Adelaide. Good to have you on. Says thanks. And David says thanks. Great having you, folks. Wonderful to have you. Much to think about in here, isn't it? If you haven't already learnt to lock in the Danielcode numbers into your trading, I suggest that you do. So thank you for being with us today. Vicky has also arrived and got this. Vicky, thank you very much for being with us. Many others have arrived since I started, and we've got a really big roll-up today. Obviously, Hank down at Hunter Valley and Justin, his son, I think they're up. Oh, boy, look at the numbers today. Big. A lot of people came today. So glad to have you with us, folks, and if there's any topic of trading or markets that you'd like me to comment on, please email me, jneedham@thedanielcode.com, jneedham@thedanielcode.com. It's up in here under our Contact Us list. Here we are, jneedham@thedanielcode.com. Let me know what you're interested in, and I'll be glad to prepare something for the next webinar we have. For now, enjoy your weekend. For me, it's almost 25 to 12 midday on Friday, and it is a beautiful, beautiful day. The pool is beckoning. Enjoy yourselves, guys. I'm off to have a Bloody Mary or two or three. I started at 4 o'clock this morning to prepare this webinar, so it's time I had a noggin knocked off. All the best, folks. Talk whenever you like. Bye for now.